Hello, everyone, and welcome to another edition of the Forex Technical Market Update for the wonderful day of June 24th, 19. Well, not 19, June 24th, 2015. This is Beyond here, and I just want to take a step back from and look at a currency pair that we have spoken about before and opportunities in the market. Okay, this is a chart of the British pound versus the New Zealand dollar. And earlier, a couple weeks ago, I pointed out the fact that this chart pattern was a head and shoulders bottom with the left shoulder here, right shoulder here, the head here, and the market neckline roughly here, and the market broke out of this neckline. As you can see, it's a reverse head and shoulders, a bottom on the British pound versus the New Zealand dollar. Now, one may think that this move is over, and I would suggest that when we have a head and shoulders bottom, especially on one of these longer term time frames, this the market could move up considerably, and we could see a move back up to $2.60 or even $2.70. So don't believe that this move is over. No, it won't reach these levels overnight, and I don't forecast that this will happen overnight. But for traders who are looking to play this market, it's good to it would be good to look for buying opportunities in this market. Buy on pullbacks, buy on breakouts, and take advantage of this British pound New Zealand dollar move. As I said, it's not going to move up to these levels overnight, but it should present some wonderful trading opportunities for swing traders, day traders, and position traders alike. It's the British pound versus the New Zealand dollar. And we spoke about this a couple of weeks ago, where I said that it looks like it was going to break out of this consolidation pattern. Taking a look at another currency pair that we do not focus on a lot, but it's a market I spoke about also that was a good opportunity for traders, and that was the British pound versus the Canadian dollar. What had happened was that the market made a new high and pulled back. And let me just draw the Fibonacci retracement. Market pulled back to the 618 retracement level and is now rallying to retest these highs near this 195.62 area, as you can see here. This 195.62 should provide a very solid resistance. And for those of you traders that took advantage of this trade, remember we spoke about this trade back when the market was at $1.86, and now it's at $1.95. Okay, so for those of you who are still in this trade and who acted and took advantage of this trade, I would look to see how the market reacts to this 195 level, and if we get a rejection, a strong rejection, then it will be good to take some profits. If not, hold on and see if this market can crack this 195.62 high. Okay, so that's a British pound versus the Canadian dollar, and it fits in the theme of the British pound being strong against most of the other currency pairs. In our portfolio, we did not take advantage of these trades because we are already exposed to the British pound versus the Japanese yen and the British pound versus the US dollar. So when you're managing a portfolio, you do not want to overexpose yourself to one currency. So that's why we held back slightly. Okay, so just to repeat, because I receive a lot of questions about this, if we get a rejection at this 195.62 level, you can take some profits for those of you who 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 took a position trade on this. And let's just go back to the rationale behind this trade. I mean, is there any doubt what is the direction of the trend here? The broader trend was to the upside. The market was moving up, and let me just give you a reference of this trade and what happened leading up to this trade. And okay, this is a weekly chart of the British pound versus the Canadian dollar. And as you can see, this market was in a channel. Let me just draw the channel. Okay, this channel, let's go back to the channel here. So this is the channel. This channel lasted, the market was in a downtrend, and then it entered this channel 2010 to 2011, 2012, 2013. And then it broke out in the middle of 2013. And as you can see from the breakout point of 165, the market has gone up to over 195. As you can see, that's quite a big movement to the upside. And I believe this market still has more to go. And it's the same thing with the British pound versus the New Zealand dollar. When you have these breakout of these consolidation patterns on a weekly chart, it can forecast long and large pip movements that can last multiple years. So you could be on the long side of this market ever since 2013. And let me just go back to the British pound, New Zealand dollar. I mean, we had the breakout here in 2015, middle of 2015. We may get a pullback somewhere here, but I expect this market to be rallying over the next couple of months at least. Okay, it's always good to point out trading opportunities in this broadcast so you guys can profit from them. Okay, taking a look, going back to our regular daily market analysis, we have the euro. We had a pullback yesterday in the euro, and this is an old trend line. The current market is like this. This market is in a consolidation pattern. And until it breaks out of this consolidation pattern, we are in no man's land here with the euro. And the breakout of this consolidation pattern can be fairly explosive and should lead to a couple of 100 pip moves in either direction in the euro. Taking a look at the Australian dollar, where the market is weak today, and over the last couple of days is looking like it wants to challenge this 76-cent level in the Australian dollar. And I've been saying that you have to look at gold. If we do get a breakdown in gold, the Australian dollar may just follow. It doesn't have to follow. It may follow, and that's the thing with trading. I mean, nothing is set in stone. We are dealing with, when you're trading, you're dealing with probabilities. Now, historically, when gold falls, the Australian dollar will fall, and that you will put on a trade to reflect that. But it doesn't have to happen, and that's why we use responsible risk management procedures and practice responsible risk management, because just as you think something will happen and you put on a trade that's too big, what will happen is that it will do the exact opposite and you will end up with a large loss. So just be careful when you're trading. Taking a look at the British pound, we're pulling back on the day slightly here. We have a doji pattern. The market is was up, and then it it has corrected back down to this 57 level, which should provide some support. The next area of support in this market is this 50% retracement at 155.55, and we will see if the market goes back down to that level. That could be a good area to enter long this market, to take some profits and enter along this market. Taking a look at the Canadian dollar, market is rallying. Market is rallying this morning, and if you are unsure of what's happening in the Canadian dollar, we could be in a triangular consolidation. And just remember, we are in the summer here, and triangles and consolidation patterns normally happen and often happen in the summer. And what takes place after is that the breakout of these consolidations is fairly big, and that's when you will get your profit opportunities. So if you want to know when should I get in these markets, it's normally during the consolidations, because when the break happens, the market will move fairly quickly. Okay, so this Canadian dollar is in this consolidation pattern here. A market that we have been looking at is this euro versus the Canadian dollar, to see if we get a selling opportunity. The market has not come down to our sell level yet, and we're looking to see if it can break out of this consolidation pattern that you will see. It's clearer on the 4-hour chart. Market is in a consolidation pattern on the 4-hour chart with support down at this 137.50 level. Let me just remove all these pivot points. Okay, so this 137.50 level is acting as support in this market. If we break down below that level, that could then trigger a sell in this Canadian dollar versus euro, and we will be taking advantage of that in our members, for our membership. Okay, now if you want to have these signals sent to your trading account automatically, remember, click on the link below to get started. As I said yesterday, I'm very proud of this service, and folks have been benefiting greatly. They have been taking advantage of these trades, and we have folks that have never made any money in the Forex market that are actually starting to make money in the markets and starting to believe that this market is a way to make money, and it's a way to experience steady gains in your account. Remember, we don't have to know everything, and if you are in a position that you cannot trade the market yourself now, it's good to recognize the importance of investing and start seeing your money grow with our signals. So this is Beyond on the wonderful day of June 24th. Thank you very much for listening, and I hope you have a good day. Thanks.